now. Technology is in focus after reporting, Sasken Technology rather is in focus after reporting its Q1 numbers. While revenue and EBITDA margins surged sequentially, total order wins declined. We have with us Mr. Modi, who is the CMD and CEO of Sasken Technology, who joins in to discuss the numbers, the way forward for the company. Mr. Modi, thank you very much for taking the time out. Well, just wanted to start with the new order wins, actually. They've come off compared to the run rate of the prior quarter. Any challenges in closing deals? And also just wanted to touch base on any kind of delays in terms of decision making, considering that one of the IT companies that we spoke to just before this, Sonata Software, said that there is some amount of delay in decision making, especially for mid-sized deals, which did impact them. So just wanted to get an idea in terms of these new order wins and what the color is there.
Yeah, so morning everyone. Thank you so much for having us with the channel today. Congratulations on you being rated #1 for the budget sessions that most of us watch. On the order book side, I don't think there's any worry whatsoever. It's in line with the plan we have been tracking and executing on. So we had the plan. Typically what happens in this quarter is the new orders are largely booked, but the renewals happen primarily in the third and the fourth quarter. So in our business, we see that as a trend. So no, to answer your question, while order book is 11.4 million, I think we have seen good momentum of order booking happening in our Sasken Silicon, which is the silicon arm that we recently have invested and created in. Similarly, we are seeing a good momentum across the verticals we are serving, largely in semiconductors, in automotive, in silicon design. In Japan, we're starting to see the momentum kind of pick up. So obviously, I think we are bullish in terms of the pace at which the order booking will continue.
Okay, so in that case, Mr. Modi, what would revenue growth and margin outlook be this time around? Just wanted to understand from a pricing perspective these new order wins that are coming in at, and what does that do to your revenue growth in FY25?
I think we have shown a growth of about 13% in Q1 over Q4. So we have seen a good momentum, and we continue to see a momentum around that. While we don't give guidance, I'm quite optimistic in terms of the growth trajectory that we are on, and to sustain the momentum. While it may not be possible for us to sustain 13% growth, but we definitely continue to see that we'll grow at higher single digits in the coming quarters.
Yeah. Yes, that's what I wanted to understand from you qualitatively, if you can give us an idea, because in the last year it was a decline. Before that, it was a 3% growth. So it's high single digits that you're looking at in terms of growth in FY25. What about margins? What's the kind of band that you're looking at?
I think the margins primarily, like we said last time also, that once we reach a revenue of about $18-19 million per quarter, we should see about 13-14% EBIT. We continue to recruit. For example, we're going to add 150 new recruits, new freshers in this quarter. We also given salary hikes in this quarter. So we may see some decline in the margins, but we are on the right path in our execution on 60x4x3, and we are seeing good results around that. We continue to march on that momentum, and we are quite optimistic in the sectors that we are serving, the engagements we have with our customers, and building the growth trajectory, growth momentum.
So how much can the margins probably decline to? You did around 4.2% in Q1 FY25. That was an improvement from 1.9% in the previous quarter. So give us a sense in terms of where the margins would probably be if you are expecting lower margins.
I think I may not be able to give a guidance on that in this, but we may see a decline of maybe a couple of percentage points in terms of the margin in the coming quarter.
Would it be as low as Q4 of FY24, where you did 1.9%?
Because we are investing in growth, and we are very conscious of the fact that we are signing deals that are accretive, as well as in the long run, it's going to help us. So focus is singularly on growth, ensuring that we are not signing any stupid deals, and we are confident of that, so that we are spending monies below the line on the bench as well as capability building, and also investing in newer areas, particularly the ones that are impacting or expected to impact the vector of technology innovation. So we're investing in 5G, 6G, we're investing in AI/ML that are specific to, say, instrument clusters inside automotive and in the telematics and those areas, which I think are going to be the vectors of growth going forward for us.
Okay. All right, Mr. Modi, thank you so much for joining us today and giving us all those details. So that's the word coming in from Saskent Tech. They expect high single-digit growth in revenue going forward. Margins might see a decline in Q2, but that's largely because of these investments and wage hike as well. Well, with that, we'll do one thing. We'll wrap on this edition of Trading Hour, but stay tuned. Halftime report is up next. A lot of action in the markets. You don't want to go anywhere.